Hey, what is going on, guys? My name is Nick, and in today's video, I'm going to be sharing one growth stock that I've been buying very heavily over the past few months and why I believe this company has huge potential going forward. Now, this is probably my most detailed company analysis to date, so I will be leaving timestamps in the description if you can't watch the entire video. So before we get into the video, all I ask is that you consider liking this video, as it does really help me out, and to subscribe so you don't miss any future uploads from my channel. Anyways, without keeping you guys in the dark any longer, the company that I'm talking about is Peloton, with ticker symbol PTON. Peloton is the largest interactive fitness equipment company in the world, which has totally disrupted the exercise industry, to say the least. And to understand a little bit more about the company's goals and their mission, I want to read you their mission statement, which says, Peloton uses technology and design to connect the world through fitness, empowering people to be the best version of themselves anywhere, anytime. So this company is all about implementing technology and essentially gamifying the exercise industry, and needless to say, it's been very successful for them so far. Over the past 6 years, the company has seen 100% compounded annual revenue growth, and then they also have been able to create a community of over 5.4 million members. And despite currently being at a massive $30 billion valuation, this company is still growing like a weed, and I personally believe this dip is providing some value for long-term investors, which we will discuss later in this video. So anyways, if you haven't already, make sure to smash that like button, as it does help me out, and now let's get into the full analysis of Peloton stock. Alright, so first thing, I want to take you guys through Peloton's business model, because there are quite a few moving parts, no pun intended. Like I said before, Peloton is the world's largest interactive fitness platform, and their business model can be broken down into two different segments, which are hardware and software. So on the hardware side of things, Peloton sells two distinct products, which are the Bike/Bike Plus, and then they also have the Tread/Tread Plus. However, recently Peloton announced a full product recall on their Tread Plus product because of safety concerns when it comes to kids and pets being pulled underneath the treadmill. Therefore, the company halted all sales of Tread and Tread Plus while they aim to fix the issue, but the shares of the stock have been falling ever since that announcement. But now let's take a look at the software side of Peloton's business model, which includes the connected fitness subscriptions and then the digital fitness subscriptions. So basically, Peloton hires instructors to lead online classes for all types of fitness, such as strength training, cycling, yoga, Pilates, meditation, and more. But they also offer live sessions where Peloton members can race against others and be ranked on a leaderboard to help motivate them to do better, so it's kind of like a game. So the connected fitness subscriptions go for about $40 per month, which connects the hardware product and allows an immersive experience on their platform with the Bike or the Tread Plus. Whereas the digital fitness subscription only runs for $13 per month, but it allows access to all of their online content without any hardware necessary. Finally, Peloton also sells their own branded merch, which does resemble that of Lululemon, but it is a much smaller portion of their overall revenues. Alright, so now that we do understand a little bit more about the business model, let's get into why I love Peloton as a company and why they're trading at an attractive price right now. So because Peloton gets a lot of hate, I do want to go over the bear case arguments and why I believe these are not valid in my own opinion. First of all, the bears argue that Peloton has a simple yet overpriced product with basically no moat to be able to protect it from competitors. And as we know by now, Peloton really only sells two unique products at the moment, the Bike/Bike Plus and then the Tread/Tread Plus, which are basically just stationary bikes and treadmills with iPads strapped to them. However, while these may be very simple products and easy for competitors to replicate, Peloton's community absolutely loves them. So in terms of the hardware, Peloton products have a very high quality of build with a sleek design that's much better than any of the competitors in my opinion, which reminds me of how Apple and Tesla design their own products. But now I also want to show you some Peloton engagement metrics, which absolutely blew me away. Firstly, I took a look on the App Store to check out what this app is about and if Peloton members do enjoy it, and what I found was incredible. It was rated a 4.9 stars out of 5 based on 41,000 ratings. Now, comparing this to its main competitors, which are Nordic Track, which is iFit, and then Echelon Fit, these companies have app ratings of 4.3 stars and 2.3 stars respectively, so that's no comparison. We can even see from their most recent quarterly earnings report that Peloton members totaled nearly 150 million workouts in Q3 of 2021, with an average of 26 workouts per month, for their connected fitness members. So that's nearly one workout per day, meaning that their users are definitely enjoying the product and the software, and they're actually probably getting fit. Finally, Peloton also reports their churn rate, which is essentially the amount of people that will leave the platform after subscribing once. And as of Q3 2021, Peloton had a net monthly connected fitness churn of 0.31%, with an annual customer retention rate of 92%. So this just goes to show, guys, that this company is definitely doing something right, and their customers absolutely love the experience and don't want to leave. Meaning that Peloton will be able to continue building their monthly recurring revenue from the connected fitness and the digital fitness subscriptions, which is always the best type of revenue that you want. Alright, so I've dispelled the myth that Peloton's product has absolutely no moat, but what about the fact that it's extremely overpriced? Well, buying the cheapest Peloton bike flat out will cost you a whopping $2,495 and I'll even admit that's very expensive for a stationary bike, but you do have to compare it to what you'd otherwise be paying for a gym membership. So Peloton offers financing for the bike at only $64 per month, then adding $40 per month for the connected fitness subscription, you're looking at a monthly cost of just over $100 a month. Now this might still seem expensive considering that a gym membership might only cost you $40 or $50 per month, but many people in the household can use the Peloton product, and that way it could save many gym memberships. And at the end of the day, we have to remember that Peloton products are premium products. They're like Apple products. If people are very interested in buying the iPhone, they're just going to go and buy it. Alright, now the second bearish argument for Peloton stock is that it's purely a pandemic play, meaning that the stock is doomed now that the economy is reopening. Ever since the announcement of the vaccine rollout in late 2020, many of the pandemic prosperous stocks like Zoom, DoorDash, and Peloton, to name a few, have been hit very hard. For instance, Peloton is currently down about 35% from its all-time high, but it's still up over 140% over the past year alone. But personally, my belief is that Peloton will continue to prosper greatly despite the reopening of the economy, and here's why. Just taking a look at Peloton's pre-pandemic performance, we can find that they've been able to compound their revenue growth at over 100% per year for the last 5 years consecutively, of which 4 years occurred before 2020. However, analysts seem to think that Peloton is only going to grow their revenues at a rate of 32% in 2022, despite the revenue growth in 2021 being at 119% expected. Now, I personally think it's doubtful that Peloton's revenue growth in 2022 would drop to 1/3 of that in 2021, simply because they can ramp up their advertising where they cut back in 2020. But don't just listen to me. Here's what the CEO of Peloton, John Foley, has to say about the subject.
Just speak to where we are, because it clearly the growth has been beyond any measure. I think the big question in the markets among investors is really just how sustainable that is and what kind of multiple to put on that, because what does that business look like a year from now if hopefully we have vaccines and we have therapeutics and people may go back to gyms and the like.
We believe that I will start out by saying we've grown 100% year-on-year revenue for 6 years. So this isn't we just didn't do this because of COVID. To your question, we're as excited to get back to work, and hopefully we have a vaccine about that. We believe what's happening here is a secular move from working out at a different location into the home. If you can have better workout experiences, and both of you know this from having a bike and a tread, when you have a choice of working out at home with fantastic instructors, with a very supportive community, with the incredible gamified and networked software, and the best hardware now in the world, why would you travel? So we think that post-COVID, this is still an incredible growth story.
So basically, the CEO of Peloton is just trying to say that he does not believe analysts are correct in saying that the revenue growth is going to slow down dramatically in a post-pandemic world. He thinks the industry is seeing a secular trend towards working out from home, and I personally believe we're only going to be seeing more of that as a result of the pandemic and accelerating the shift to online. It's also important to realize that people are creatures of habit at the end of the day. Just because the economy is reopening does not mean that people are going to change back to their old ways. People are probably going to still want to work out from home, order DoorDash, etc. So overall, I believe Peloton has a long runway for growth and is not limited to a pandemic-stricken world. Alright, so the last bearish argument for Peloton stock is that the company is completely overvalued for an exercise equipment company. So I don't know if you guys have been on Yahoo Finance in the conversation tabs, but for Peloton stock, it seems to be littered with bears just trying to bring the stock price down, saying ridiculous things. It's actually quite hilarious, to be honest. But many of them will say something along the lines of Peloton is a hardware company trading at the valuation of a technology company. And as you might have guessed it, this is where I disagree. What the bears fail to realize is that Peloton is not just a hardware company. The true business is in their subscription business model. Right now, we can see that based on Peloton's total Q3 2021 revenue, subscriptions are definitely the smaller portion, only representing about 19% of total revenues. And this is largely the reason why people argue that Peloton is only a hardware company. But to me, this only means that there's huge revenue growth opportunities in subscription revenue. As of Q3 2021, we can see that Peloton grew its connected fitness subscriptions by 135% year over year, while its digital subscriptions grew by 404% year over year, which is astonishingly good growth. So even though the hardware side of their business grew at about 140% year over year, their digital subscriptions are growing much faster and are starting to take up a much larger portion of their overall revenues. Not to mention, guys, Peloton's recurring monthly revenue is extremely sticky, which means that customers are very willing to continue paying for that monthly subscription service because their service is so good and people will already have the hardware in their homes, so it's pointless to not have the software included with the hardware. And this is another reason why Peloton's customer retention rate is at 92%. So based on the price to sales ratio of 9 for Peloton stock right now, we can compare this to a similar company in terms of receiving both hardware and software revenue, which could be Apple. And right now we see that Apple is trading for a price to sales ratio of just above 6, so it's really not that expensive in terms of the company's annual sales. Especially considering the fact that Peloton is going to grow its revenues way faster than Apple over the next few years, I think it's at a pretty decent valuation. However, yes, the forward PE ratio is above 200 right now, which does make the stock look extremely expensive, but you do have to realize that the company is growing its revenues at above 100% per year every single year over the past 5 years, so you are going to be seeing a reflection of that in the earnings growth, which will be coming over the next few years. So personally, I believe that taking this opportunity to buy the dip in Peloton stock will provide a good opportunity for long-term investors over the next 5 years. All right, now that we've covered the bear case in detail, I do want to go over some of the bullish points on why I believe Peloton is such a great investment for over the next 5 years. First of all, we have the social media impact. Peloton takes advantage of social media to leverage their business, but also to create free advertising for their products and services. And no, I'm not even joking. For instance, Peloton allows its members to share their workouts and progress updates on Instagram stories. So not only is this a great feature for Peloton members to interact among their friends, but it's also creating free advertising for those who don't have a Peloton product. And this only attracts more attention to the company's brand, which means that their customer acquisition cost is going down because they don't have to pay for advertising to create new customers. Peloton's also leveraged their own Instagram page that has over 1.5 million followers, which is still growing at about 40,000 followers per month, which is very healthy. And finally, Peloton also has a Reddit page where their users talk about their experiences, and they also talk about upcoming classes, etc. And here we can see on the subreddit stats page, it's just been exploding in size as compared to their competition, which has barely begun. So in my opinion, I see Peloton taking huge advantage of social media in their business, and they're making it extremely easy for its users to be able to interact among each other based on their experiences on the Peloton platform, which also creates this free advertising and networking effect for their brand. So I think that's totally awesome. The second bullish point that I want to share is the fact that Peloton is sitting on a huge opportunity when it comes to product expansion. As we know by now, Peloton currently only has 2 unique hardware products, which are the Bike/Bike Plus and then the Tread/Tread Plus. But recently, back in December of 2020, Peloton announced that they'd be acquiring the popular exercise equipment company Precor for $420 million, which is a huge deal for the future of Peloton. Peloton said Precor's significant US manufacturing presence, totaling 625,000 square feet of US manufacturing facility in North Carolina and Washington, will help it deliver faster products and control the entire production process from design to ship. So basically what this means is that Peloton will be able to start manufacturing some of their products in the US at these existing Precor facilities, but it also gives them the opportunity to build out different products because of Precor's expertise in different product segments. For instance, just take a look here. Precor already offers tons of unique rowers, which is definitely an avenue I could see Peloton jumping into with the gamification of rowing. So overall, I just see so much opportunity ahead for Peloton beyond the bike and the treadmill, and these products have sold extremely well, guys. Like, people absolutely love these products. Just imagine what will happen when they have more products like the rower and strength training equipment. I think it's going to be a wrap. Finally, my last bullish point when it comes to Peloton stock is that they have huge opportunities when it comes to commercial growth. So as of now, I would surmise that Peloton gains the majority of its sales and the vast majority just from selling direct to consumer because of the pandemic and the whole work from home trend that set in last year. But as the economy reopens and we see gyms, hotels, cruise lines, etc. get back on their feet, I believe Peloton is going to begin seeing an incredible opportunity in selling business to business. Here on their website, we can see that Peloton is already getting serious with their sales to hotels. With their Hotel Finder feature, anyone can search up a hotel that offers a Peloton machine, which can be a huge reason for some people to choose that hotel if they regularly use their Peloton. So not only is it a benefit to the hotel by having free advertising on Peloton's website, but also it does give them a competitive advantage in terms of their fitness equipment facility. But guys, we also have to consider gyms because this is going to be a huge and heavy hitter for Peloton. In order for gyms to compete in a post-pandemic world, I truly believe that they're going to have to upgrade a lot of their equipment and install a lot of technology and gamified equipment to keep their customers coming back. And I think that Peloton is going to take a huge portion of this market share, especially when they start to diverse into different products such as the strength training equipment. That's going to be huge for gyms. So yeah, the company has tons of growth when it comes to the commercial side of things, but also the direct to consumer. Finally, guys, I just want to talk about the financials and the valuation once again for Peloton stock because the price does have to make sense even though this is a great company. To start, I want to show you that Peloton has a stellar balance sheet. Here we can see that as of March 31st, 2021, the company had total current assets of $3.5 billion with $2.1 billion in cash, while their current liabilities are only $1.3 billion, which gives them a current ratio above 2, and this is very good. We can even see that their long-term liabilities are less than their current assets, which means that the company does not have a lot of debt, which is especially good considering all of the talk about inflation we've heard lately. All right, now jumping over to the income statement, we can see that the company's revenue increased from $525 million in Q3 of 2020 to over $1.26 billion in Q3 of 2021, which is 140% revenue growth year over year. We can also see that Peloton recently became profitable in 2020, posting 3 consecutive quarters of earnings, but then in their most recent quarter, they did drop back below zero, coming in with a net loss of 3 cents per share. Overall, though, Peloton is very close to achieving full year and long-term profitability, and I believe that their earnings growth will be very quick over the next few years as we see them become profitable. Even analysts see Peloton growing their earnings above 58% per year over the next 5 years, which is always a good sign. But in terms of the company's valuation today, there's no denying the fact that it is still slightly expensive. The forward PE is sitting above 200, while the price to sales ratio is about 9. But like I said before, I mainly only care about the price to sales ratio right now because the company has not achieved full year profitability. I think Peloton is still in that hyper growth phase where they're spending aggressively to build out their business, and so I think profitability is going to be a story for about 5 years out, and right now the sales are what matter most. But for a business that's been doubling their revenues for over 5 years straight and they're basically trading below a price to sales ratio of 10, I think that's a pretty good deal in my opinion. But I also believe there's too much opportunity in this stock right now to ignore it any longer, and I think this dip will provide a very good buying opportunity. So despite this company having such a simple product line and seemingly having no moat, I am extremely bullish on this company over the long term. I think the work from home era has just begun, and I think that the pandemic has accelerated this, which will only continue in the years to come. Overall, I love this business. It does remind me of some big tech companies like Tesla and Apple, so we'll see how this plays out, but I think it's trading at a fair valuation right now considering all of its future growth. But let me know what you think down below. Is Peloton a type of stock that you would consider buying? Just let me know. Anyways, if you did watch this video all the way through to the end, you are the MVP. That is incredible. Thank you so much. And if you haven't already, make sure to smash the like button to help support my channel. It does really help out. And if you haven't already, definitely consider subscribing for more content and with bell notifications on so you don't miss any of my future uploads. But with that said, I will see you guys in the next one.